Welcome back to Boni's Life, your intellectual sanctuary in the often chaotic world of cryptocurrency. I'm your host, and we continue with our part 2. We're embarking on what is left of a comprehensive journey through the crypto landscape, examining the market's performance over the past week with particular emphasis on the last 24 hours. Ethereum and altcoin predictions. Vitalik Buterin, Ethereum's co-founder, recently addressed Ethereum's price underperformance, suggesting that the market is currently undervaluing the technical improvements and growing ecosystem. He emphasized that Ethereum's value proposition extends beyond price action to its role as infrastructure for decentralized applications. Raoul, former Goldman Sachs executive and founder of Real Vision, suggests that Ethereum and select Layer 1 alternatives could outperform Bitcoin in the latter half of 2025 once Bitcoin's dominance cycle peaks. His analysis incorporates network effects and adoption metrics beyond simple price action. For altcoins more broadly, analyst Benjamin Cowan suggests a more selective approach in the current market, focusing on projects with strong fundamentals, active development, and genuine utility rather than speculative assets. Airdrops and farming opportunities. For those looking to participate in the cryptocurrency ecosystem beyond simple buying and holding, several interesting opportunities exist in the form of airdrops and yield farming. Notable airdrops: 1. Cross-Chain Bridge Token (CBT). This project is airdropping tokens to users who have utilized cross-chain bridges to transfer assets between different blockchain networks. The estimated value ranges from $200 to $1,000, with the airdrop ending on May 10, 2025. Requirements include having used at least 2 different cross-chain bridges with a minimum total transfer value of $1,000 within the last 6 months. 2. GameFi Universe (GFU). This gaming metaverse project is distributing tokens to players who participate in their beta testing. The estimated value ranges from $50 to $300, with the airdrop ending on May 1, 2025. To participate, users need to create an account on the platform, complete at least 3 hours of gameplay during the beta period, and provide feedback. 3. DeFi Protocol Token (DPT). This governance token airdrop targets early users of their decentralized lending platform. The estimated value ranges from $100 to $500, with the airdrop ending on April 24, 2025. Requirements include having used the platform before the snapshot date with a minimum of 5 transactions. Yield farming opportunities. 4. High Yield DeFi Index on Avalanche. This farming opportunity provides exposure to a basket of DeFi tokens paired with AVAX. The annual yield ranges from 25% to 50%, with a minimum investment of $1,000 and a 14-day lock period. While the potential returns are attractive, the risk level is high due to potential impermanent loss and market volatility. 5. Stablecoin Yield Farm on Binance. Smart Chain. This farm focuses on stablecoin pairs USDT BUSD, offering lower but more consistent yields with minimal impermanent loss risk. The annual yield ranges from 8% to 12%, with a minimum investment of $100 and a 7-day lock period. The risk level is relatively low, though platform solvency risk and stablecoin depegging risk remain considerations. 6. Governance Staking Pool on Solana. This staking pool allows Sol holders to earn yield while participating in protocol governance. The annual yield ranges from 5% to 7%, with a minimum investment of 1 sol and a 30-day lock period. The risk level is low, with primary risks being validator performance and network downtime. ICO Announcements. For those interested in early-stage investment opportunities, several initial coin offerings, ICOs, are currently active or upcoming. 7. Decentra Health, DHLTH. This healthcare data management platform allows patients to securely store and share their medical records while maintaining privacy and control. The ICO is active until April 30th, 2025, with tokens priced at $0.15. The project addresses genuine challenges in healthcare data management and has secured partnerships with several healthcare providers. 8. Green Chain Energy, Green. This project is developing a decentralized marketplace for renewable energy certificates and carbon credits. The ICO begins on April 15th and runs until May 15th, 2025, with tokens priced at $0.25. The focus on environmental sustainability aligns with growing market trends and regulatory pressures for carbon accounting. As always with ICOs, thorough due diligence is essential. Verify the team's credentials, examine the technical feasibility of the project, and consider the token's utility and economic model before participating. Security warnings and risk management. The cryptocurrency space continues to face security challenges, and several active threats deserve attention. Fake token airdrop scam. A sophisticated phishing campaign is targeting cryptocurrency users by promising free token airdrops. Victims are directed to connect their wallets to malicious websites that appear legitimate but actually drain funds once wallet access is granted. Warning signs include unsolicited messages about free airdrops, requests to connect wallets to unfamiliar websites, and artificial urgency or limited time offers. Pump and dump schemes. Several low-cap cryptocurrencies have been targeted by coordinated pump and dump schemes, where prices are artificially inflated through social media promotion and false announcements. Once prices rise significantly, the organizers sell their holdings, causing prices to collapse. Be wary of sudden price increases without fundamental reasons, coordinated social media promotion, and promises of guaranteed returns. Risk management strategies. Effective risk management remains essential in the volatile cryptocurrency market. 9. Position sizing. Never invest more than you can afford to lose. A common guideline is to limit your crypto allocation to 5 to 10% of your overall investment portfolio. 10. Diversification. Spread your cryptocurrency investments across different assets and sectors, including large-cap cryptocurrencies, mid-cap alternatives with established use cases, and a limited allocation to small-cap projects with high potential. 11. Dollar cost averaging. Instead of trying to time the market with large lump sum investments, spread your purchases over time to reduce the impact of volatility. 4. Security practices. Implement strong security measures, including hardware wallets for significant holdings, two-factor authentication, and regular security audits of your setup. Educational segment, Understanding Market Cycles. Before we conclude, let's take a moment for our educational segment. Today, we'll explore cryptocurrency market cycles, a crucial concept for both new and experienced investors. Cryptocurrency markets are known for their cyclical nature, with dramatic bull and bear markets. Understanding these cycles can help you make more informed investment decisions. The typical crypto market cycle consists of 4 phases. 12. Accumulation phase. This occurs after a bear market when prices have bottomed out. Smart money begins to accumulate assets at low prices, while general sentiment remains negative. Trading volume is typically low during this phase. 13. Markup phase. As more investors recognize the opportunity, prices begin to rise steadily. Media coverage increases and public interest grows. This phase often accelerates into what's known as the euphoria stage, where prices rise dramatically, and FOMO, fear of missing out, drives many new investors into the market. 14. Distribution phase. Early investors and whales begin to sell their holdings to late arrivals. Prices may still rise or move sideways, but volatility typically increases. Warning signs include divergences between price and technical indicators. 4. Markdown phase. The market turns bearish as selling pressure overwhelms buying pressure. Prices decline, sometimes dramatically, and negative sentiment prevails. This phase can be prolonged and may include several dead cat bounces or false recoveries. Each full cycle has historically taken about 4 years in Bitcoin's case, often aligned with the Bitcoin halving events. However, cycles can vary in length and intensity. Based on current market conditions and historical patterns, many analysts suggest we are currently in the early to middle stages of a markup phase, with the potential for significant price appreciation still ahead. However, the increased institutional participation in this cycle may alter traditional patterns, potentially reducing volatility but also extending the duration of different phases. By identifying which phase the market is currently in, you can adjust your strategy accordingly, accumulating during bear markets, taking profits during euphoria, and managing risk during distribution phases. Conclusion and key takeaways. As we conclude today's comprehensive analysis, let's summarize the key points. 15. The cryptocurrency market has shown mixed performance over the past week, with Bitcoin demonstrating resilience around the $84,000 level, while Ethereum has underperformed significantly. 16. Market sentiment has shifted to extreme fear territory, potentially presenting opportunities for contrarian investors, though caution is warranted given the broader macroeconomic uncertainties. 17. Technical analysis suggests Bitcoin is forming a potential bullish flag pattern, while Ethereum has reclaimed a key support level at $1,574 and could target the $1,838 resistance zone if recovery continues. 4. Several significant events are scheduled for the next 3 days, including the Financial Cryptography and Data Security Conference, Ethereum Soul, and potential regulatory announcements. 5. New projects like Solaxi, EarthMeta, and Fjord Foundry present interesting investment opportunities, though thorough due diligence remains essential. 6. Global events, including tariff announcements and CBDC developments, continue to influence cryptocurrency prices, highlighting the increasing integration of crypto markets with traditional financial systems. 7. Expert opinions on Bitcoin's future price range from conservative consolidation between $80,000, $90,000 to extremely bullish projections of $1 million by 2030. 8. Several attractive airdrops and yield farming opportunities exist, though they come with varying levels of risk and requirements. Remember that cryptocurrency investing involves significant risk, and it's essential to do your own research before making any investment decisions. The information presented in this episode is for educational purposes only and should not be considered financial advice. As Aristotle wisely noted, the whole is greater than the sum of its parts, a principle that applies well to cryptocurrency analysis. By combining technical analysis, fundamental research, market sentiment indicators, and awareness of global events, we can develop a more comprehensive understanding of this fascinating and evolving market. Thank you for joining me for this episode of Boni's Life. If you found this analysis valuable, please subscribe to the channel and share this video with others who might benefit from it. Until next time, stay curious, stay informed, and most importantly, stay safe in your cryptocurrency journey.